Hi, good morning, everyone. Welcome to the first One Good Trade live show for 2026. I think we have some of you joining us already. If you can see and hear me, this type of GM for good morning, guys. Before we get started today on the One Good Trade live show, and I want to introduce to you guys a very special guest that we have today as well, JB. But this type of GM for good morning, guys. You can see and hear me. All right, you can see my screen as well. Let's get started, right? One of the shows that we try to do every 1 to 2 months, right, just to add more value to you guys and share with you guys a very interesting, I would say, product that you can use to actually amplify your profits, right, for the stocks that you're taking a position on, right? So that type of GM, good morning. Let me just acknowledge and thank all of you for just being early here today. Let's see who's joining us today. Hi, we have Elizabeth. Hi, good morning as well. Elizabeth, hi. Michael, good morning. All right, let's see. We have Geneva, good morning as well. Hi, Alan, good morning. Okay, there we go. I think more and more people are slowly coming on board. Good morning as well. Hi, TK Fun as well. Morning, Mega, Mato as well. Morning. Okay, good. So this is working, guys. Welcome to our One Good Trade live show, right? And in this live show, it's a bit different, right? It's different from, if you've been following me and my team, well, every Friday, we go live, and that's why we do our AMAS, Ask Me Any Stocks session, right? That will be tomorrow, because today is Thursday, today is not Friday, right? So every Friday we go live, that's our Ask Me Any Stock session. You ask us about the stock that you want, and then we go through. But today is not the Ask Me Any Stock session, right? It's a Thursday, right? And today will be what we call a One Good Trade live show, kind of like a live show that I started last year in collaboration with Jamie from Macquarie, whereby it's more chop, right? We go through kind of like the past stock that I've shared with you, one of the top Singapore stocks I've shared with you the previous time. And we do a recap, and then I'll go ahead to share with you guys one top Singapore stock that is in my watch list. And that's where Jamie will come on board to also share how one can actually take a position on this stock, right, using what we call structured warrants, all right, that can potentially magnify your return. So Jamie is an expert in warrants. I have her today to add more value to you guys. So maybe I can go ahead to pass on the mic to Jamie. Welcome, Jamie. Right, good to see you over here. All right, maybe Jamie, you can just share a little bit on yourself. What have you been doing over the past holiday? As we began 2026, or maybe last month December as well.
Hi, everyone. Hello. Happy New Year. Hi, Joey.
Yes,
Good to see all of you. If you are not familiar with me, my name is Jamie. I'm the head of Singapore Warrants at Macquarie. And my role is primarily to educate investors who are interested in trading a product or who are currently already trading the product, so that you may have a smoother, hopefully more profitable investing or trading journey with the product known as structured warrants, which are listed on the SGX. Now, we have been doing this One Good Trade live show for about a year now. And the last time we spoke to you, as well as with Joey live on the show, was on the 24th of November. And this is our first show to kick off 2026, which I think has been terribly exciting, especially for Singapore stocks. You see a lot of stocks moving, large cap, mid cap, small caps, and what a wonderful time, and how apt for us to then be on this show to recap some of the trade ideas that Joey last shared in November, as well as the one good trade that we can look forward to in the short term from now until the next show, maybe about a month away. So Joey, I think in case you don't remember, but for those who missed out or for those who are rejoining us this year again, the two stocks that you talked about in the last show, do you remember what they were?
I remember the previous one was Sheng Siong, but I think the one that we did before that did pretty well as well. I'm not too sure what was that again. The other one, the Singapore stock.
City Development. So
City
the
Development,
one
wow.
hot stock, the one hot blue chip stock that everyone I know has been talking about. Now, on this show, we always do a recap, right? Because we want to know how Joey's idea panned out, but we also want to do a recap on how the warrant would have performed. Whether it made money, whether it lost us money, and where the cut losses would have been and what did it show up as. So just very quickly, I will share on the two ideas that Joey did a recap on in the last show. He recapped on CityDev, but his one good trade then was Sheng Siong. So one at a time, I'll just quickly share my screen and show you my website.
Maybe Jamie, would it be good if I come pull out the stock of maybe we do CityDev first, what happened maybe about 2 months back, and then we could look at the the warrants on that to see how it did. Would that be good?
Sure,
So
we can do that again for those for the benefit of those who weren't following us on the show. Joey will now quickly recap on the levels he talked about back then.
Sure. Thank you so much, Jamie. All right, so I think maybe we talk about CityDev first, like what happened. I think that was like in October, end of October, we did CityDev. I think we look at the price and then we see what could have happened if we've got, the call warrants then, right? Okay, let me go ahead to just pull out my chart, right? On CityDev, let's take a look. Where is it? Let's go, right? So City Development, I think we covered it in October. Let's take a look at it. Right over here.
And then you had a refreshed view on 24th of November on the shares.
Yeah, I think right over here, we got a view. I think we covered it somewhere around here. All right. Okay, very good. Let me do a quick recap on CityDev. So what happens is, guys, I mean, you've been following us. What happens is that, on this One Good Trade live show, that's where we cover a top Singapore stock. And, Jamie would then come on board to share her views on how, I mean, what you could do is just to buy the stock as per normal. I mean, you just buy normal Singapore stock in a normal trading account, right? But what you could do to actually amplify your returns, right, is that you could actually, trade the warrants, all right? Buy the warrants such that, instead of making like 5-10%, if you buy the normal Singapore stock, you could make not 5-10%, but 20-30%. Does it make sense? All right, and that's how warrants can help you, all right, maximize your profits if you are in the same direction, right? So let's take a look at CityDev. So very quickly, I think in October we covered it. And then why did I even cover it in October, right? Well, essentially you can see that for CityDev, last year since April, right? Since April, right over here after Trump introduced the reciprocal tariff, of course, we got a couple of bearish signals. So I have this tool that is called the One Good Trend Pro Indicator based off my One Good Trend strategy, right? So today, guys, I don't have time to share the whole strategy and the whole framework, right? So if you want to find out a bit more on that, well, you can attend a free webinar. I think we do have a webinar next Tuesday. Let me just place the link in the chat. I mean, I'll just place the link in the chat in case you want to find out a bit more on the strategy. But that is if you want to find out a bit more. But today will become like a recap. So we got a couple of bearish signals. So I have this tool that kind of like help me to, not just me, but my team, my graduates as well, to know when to get in and get out. So you can see that right over here. It disappears, right? Any stocks, any asset classes, this is City Development, all right? Turn it on, pump, there we go, it comes up again, all right? So it comes up with bullish and bearish signals to guide us when not to buy and also when to buy, all right? I think it's very important to know when not to buy as well, because, you're always going to think about buying and buying, but if the stock is not good, then what for you to buy, right? So you only buy when there are signs of confirmation, there are signs of a stock, seeing strength, and then you get in, all right? So you can see in April, we got a bullish signals. In fact, we actually shared this stock idea with our clients in Philip Securities, right, since May, June last year. But, in our One Good Trade live show in October, I think somewhere over here, where we actually got a 1GT bullish signal, another bullish signal came out, all right? I think the price then, if I'm not wrong, Jamie, it was maybe about $7, $7.10, all right, $7.10. All right, of course, it has gone up from here all the way to here, and it would be about a 29%, all right, 29%, if you would have got in on the underlying stock, right? Without warrants, right? This is just a normal stock. You just buy, it's about 29%, like got in at $7.10, right? To now is what? Now $9.24. It's about 29%, right? On the underlying stock. So maybe I can pass on the mic to Jamie, let's say in October, if you got in, I mean, based on the structured warrant, at about $7.10, right? Based on structured warrant, what would be the kind of like the percentage gain? Is it 29%? All right. Is it more? All right. What would that be? Well, Jimmy, let me pass on the mic to you, maybe to share a bit more on CityDev. All right, City, go ahead.
Okay, so just sharing my screen.
Yep, can go ahead to share your screen.
So this is our website, warrants.com.sg. Our homepage is here. And in order to recap the performance of any warrant, that will be the historical performance tool that you can find under the warrant tools drop down, right? So back in October, but also November when we did the recap, the one warrant we talked about was this VY2W. And the reason is because back then it existed. Okay, so Joey was asking, okay, so what happened, in October, and to the point where the stock went to 850, which Joey said was the further upside. Of course, now we know it's, over $9. But back then, we said 850 was a good, upside target to aim for. And that target was realized on 7th of January. Of course, it closed even higher at 874 that day, but it went up to 850 on 7th January. So that is like, a 2.5 month time frame kind of trade, right? And if you had gotten in just above, $7, again, that was Joey's support, whereby if it broke below, then we really should cut loss there. But if that was the case, you would have made about 24% over this 2.5 months, which is great returns. Of course, more if you continue riding it. But if you have entered via this call warrant, VY2W, you would have gotten in about 3.6 cents and then taken your profit around 8.8 cents or probably lower, right? Because like I said, the target was 850 and you weren't greedy, you just wanted to get out 850. Well, I don't have that exact measurement because the day that it first touched 850, it closed at 874. But basically, I wanted to show you just with this, what if CityDev traded up to about 24%? What would the warrant have done? Well, in this case, the warrant would have gone up about 6 times more to gather a 144% return, okay,
Wow.
via the warrants, right? If you had gotten in a bit later, let's say you didn't tune in the October show and you tune in only in during November, when again it was reiterated that as long as the stock was above $7, Joey was very certain that the trend was still intact. And again, you have gotten in a bit later, but because you gotten in a little bit later, your holding period is not as long. So this essentially is about less than 2-month trade, right? 1.5 month trade from 24th November to 7th of January. Again, getting out 850 or a bit higher on this date, you would have made a higher percentage return, not just 144%, but in this case, 203%. Why? Because the less time the stock takes to move in your favor into your target level, the more gearing returns you will enjoy. Okay, in this case, it would have made about 8 to 9 times more than CityDev shares. So this is how the CityDev call warrant would have performed relative to Joey's view. Again, we're very consistent. If it went below $7, we would have cut our losses. But as long as it stayed above, we knew what our maximum period was, based on his view, which was, again, if you go back to the video, I think it was no more than 3 months. In this case, very nicely, CityDev has played out the view in about
Very
1.5
nice.
months, and you would have taken your profits. Of course, for those, it's funny because if you look at today, with CityDev at above $9, right? You obviously would have made more. You have made over 300% returns. But I think what we talk about consistently on this show is to be very disciplined. These are short-term trade ideas. And so, we are very stringent with the cut loss levels that Joey shares on, the entry as well as the exit. So once it's gotten there, we want to exit from our positions. Again, sometimes on hindsight, we could have gotten more returns, but of course, CityDev could also turn down from 850, right? Which we have seen short-term, selling pressure. So it's okay. You don't have the 300% return, but hey,
100% good enough.
return would have been fabulous as well, right?
Yeah.
So I think a nice example of how a warrant trade panned out really nicely, an example of how you could have enjoyed leverage returns if you had entered via the call warrant for this short-term trade over CityDev. But Joey, another trade idea we talked about in our last show was Sheng Siong.
Yep.
So could you just take us through how Sheng Siong has performed?
Sure. Let's take a look at Sheng Siong as well. Let me just go to share my screen. All right. Okay. Maybe what I could do, since you're talking about CityDev just now, all right, and I'm glad that Jamie shared about the structured warrants, how instead of this making like 29% on the underlying, all right, it could be actually more than 100%, maybe more than 200%, right? If you have held on to the structured warrants, right? Of course, you want to have a plan, all right? One thing about warrants is that the faster it moves towards our target, the more returns you make. But make sure you have a plan, right? To get out, take some profit. It's more than 100, 200%. That's pretty awesome already, all right? Okay, but let's take a look at CityDev, very quickly, right? Because maybe some of you might be thinking, hey, is it still too late to get in and stuff? Well, you can see quite clearly that we actually had another bullish signal coming out on December, all right? That was after the call, the live show that we did in October, right? So in December, last month, well, we got another 1GT bullish signal. You can see, right, we broke the $7.50 as well, right over here. We're consolidating below it, right? Up, down, and pump. We broke 750, right? Started, right? The rally started, all right? The green short-term trend, 20 days moving average line that was going flat also started to turn up, right? So very strong rally, I would say. But right now, what we could see is that perhaps 9 over the past 1-2 weeks. Well, we was attempting to go above $9. We couldn't, but finally, yes, we did, right? We went above 9. We're still holding above 9. So that could be kind of like a new support level, all right, if we were to stay above the $9. Does it make sense, Mark? All right, so that's CityDev, right? Just to do a quick run out of where we are right now. All right, if there could still be more upside, well, I think it still looks okay. There's no bearish, rate signal. I mean, coming out like what we've seen last year in March. If that doesn't come out, well, we continue to ride. All right, we continue to ride. All right, and then we see we could take some profit along the way as well. Okay. Now let's talk about Sheng Siong. I think Sheng Siong, we covered it. If not wrong, Sheng Siong, we covered it in like maybe November, right? After CityDev, correct, JV? Sheng Siong. Let's take a look. Maybe right over. Let's pull out Sheng Siong. Okay, good. This is Sheng Siong. So very quickly, right? So later I'm going to share if you guys want new kind of like a stock that you guys want to put in your watch list. But let's take a look at Sheng Siong. We covered it in, if I'm not wrong, in November, right? In November, maybe somewhere around here, right? Somewhere around here and stuff, right? So I think you can see for Sheng Siong, one of the top performing stocks, obviously, since April last year. We got a couple of like bullish signals, pump, 1, 2, 3, 4, 5. In fact, another bullish signal just came out last week, all right? And we have managed to push a little bit higher as well. It's about $2.74, $2.74. So not too bad. I think we have held above a very strong support, maybe about 250 to 260. All right, resistance right now would be around the $2.80. That seems to be the cap over the past like 2 months, right? Since like November when we saw the rally, all right? So if we can break the 280, I think targets could be revised higher to maybe $3, all right, for the underlying stock. So let me pass on the mic maybe to Jamie right now. I mean, just to do a quick recap of Sheng Siong as to how one could actually use warrants previously. All right, Jamie?
Thanks, Joey. Now, the warrant we talked about the last time, I'll just quickly find it here. So again, same page, warrant stock industry historical performance. We've got a new warrant now, but I believe back then, it did exist. Q73W was the warrant we talked about. It was listed on the 21st of November, but on the show we talked about it on the 24th. And back then, the warrant price was about 1.3 cents. Now, the targets we discussed back then, Joey, was that, the trailing support was around 255. And, maybe we put a stop loss just below it. And in my example back then on the show, we actually put a cut loss at 253, and then we were targeting for $3, right? So that was my example. And back then, again, for those of you who missed out, don't worry, you can look at the video here on Warrant Education's all videos. You'll be able to see that video and do a recap of what Joey and I talked about. But basically, one thing we always do on the show is, what is the maximum holding period of the warrant? Okay, and back then we said the maximum holding period was around the end of March, right? Meaning if Sheng Siong didn't get to $3 or didn't hit the cut loss level of 253, that is the maximum holding period. You have to get out by 30th of March. Now, interestingly for Sheng Siong, it has been trading in that range where it has not gone down to $2.53, but it's also not gone up to $3. So as such, this warrant is something we continue to hold right now. And how that has panned out is Sheng Siong has only gone up about just under 2%, and the warrant is down 15%. Why? Even though Sheng Siong has gone up, it's only gone up less than 2%. And so the time decay, the holding cost of the warrant is eating into the geared return such that it's in fact down 15%. So what now, right? The question is what now? Well, we already know, we have already ascertained the maximum holding period is until 30th of March. So we will continue to hold, right? Unless Sheng Siong goes down to 253, we're going to cut our losses there. But we continue to hope for Sheng Siong to go towards $3. Or Joey has shared that the momentum is still intact, so we continue to wait. Now, what will happen if you had gotten in on 24th of November at 1.3 cents and you're still waiting, right? So in order to see what Sheng Siong will do if, what Warren will do if Sheng Siong went to $3, we can quickly use a tool called the calculator. Again, the same tool we used on the previous show. but we just want to again just confirm what will happen from here. Right now, Sheng Siong is 273. We got in around 11 November, so we want to change the date to 24th of November. We want to change the date to that. It's not updating, but we want to set our targets to $3. Okay. And then we'll look at the simulator results. Sorry, this is not updating, so it's just a slight glitch on the tool. But as we said back then, Sheng Siong was 269. And the price of it would have been 1.3 cents. But regardless, okay. So ignore this. This should update to 1.3 cents as you've seen earlier. But basically, if Sheng Siong went to $3, let's say today, right? Today, that would have been a 12% return rather than a 1.9% return relative to the 269 price on 11th of November. Now, if so, the warrant will go up to 1.9 cents versus 1.3 cents when you enter. So that's still geared returns. But again, we talked about how if, we need to give Sheng Siong more time, right? Because the maximum holding period is until the end of March. Now, if Sheng Siong did take another, 2 months to go to $3, this warrant will now gain 1.5, will now make gains of 1.5 cents. That is still more than the entry price of 1.3, but it will still make that return, right? Of course, it's not going to be as geared, it's not going to be as much, but it's going to make that return to 1.5 cents. Let me just quickly work out here. 1.5 cents over 1.3, that's about a 15% return. So it's going to make 15% return. Not a lot of gearing more than, the 11.5% return you have made via the stock, but still more. Okay, and that's because we have held it to the maximum date that we have calculated, in the last show, which is, 30th of March. So of course, if Sheng Siong were to go to $3, next month, around the Chinese New Year period, then it's going to go, the warrant price is going to be higher because less time decay, less holding costs. So you will make higher returns. In this case, 1.7 cents, divided by 1.3 cents the entry price, that would be about 31% return. So you enjoy around 3 times more gearing compared to the Sheng Siong shares. Okay, so again, this is Sheng Siong. It's not gone to where we want it to go to yet, but we continue to hold on to it, and we continue to hope that that $3 happens and is met sooner rather than later. Okay, so this is still a work in progress. But of course, we talked about how you need to cut losses if it does go down to 253. So you will need to take the magnified losses there. Okay, so that's just something to repeat and summarize for Sheng Siong. Okay, now we spent some time doing a recap, and I think we want to go into the very exciting segment of the show now. What can we look forward to? What is a new stock idea that's looking very exciting on your charts? Joey, and which we want to use a warrant to trade and magnify the returns for. Joey,
sure. Thank you so much, Amy. Thanks for sharing a bit more on Sheng Siong. All right, so let me go to share my screen very quickly. All right, and so that's Sheng Siong. I hope that Jamie has given you kind of like a big picture of on how you can use warrants. All right, and you could magnify your returns, whether it's CityDev or Sheng Siong. All right, so as I mentioned for Sheng Siong, before I talk about this new stock coming up, all right, Sheng Siong 280 would be a resistance. Past 1-2 weeks seems like that's where some selling pressure is coming back. You can see that we actually got a bullish signal coming up. So I'm watching the 280, right? I think if we break the 280, right, we go to you can see I set some alerts, 281, 282, 283, right? And if we do break 280, we might even see a new bullish signal coming out. All right, and that's where what we could do is we could set an alert. All right, what we could do is set an alert on this two that I have, the One Good Trend Pro indicator. All right, there we go. Right, so any bullish or bearish signal come out, I'll be alerted by an app notification, an email and stuff. Then we could see if you could take a trade on the underlying or even warrants, right, to ride the momentum. All right, and so that is Sheng Siong. Okay, so very good, right? So in every One Good Trade live show, as I said, that's where just besides doing a quick recap, that's where I will also kind of like share a new Singapore stock that you might want to put in your watch list because it still looks good. We probably have a few bullish signals, right? All the confirmations are still pointing up. So what will be that stock for today, right? So let me go to share that stock right now. And of course, Jamie will come in and give her view on how actually warrants could be taken, all right, on that particular stock. So let me go and put it out. I think that would be this company called, let's see, Keppel, right? In fact, today it's gone up a little bit, right? I thought it would come down a bit more to get in, but this is Keppel, right? Keppel right over here. The code is BN4, right? Keppel Limited, right? So one of the stocks that we like, in fact, we have been talking about this stock since last year, many months back. We shared with our clients as well in Philip Securities. Those of you who are clients of mine in Philip Securities, whereby you have a trading account, you're probably receiving some of our WhatsApp ideas daily, and this is definitely one of those stocks. You can check it out, all right? And the reason why we like this stock is because we actually had a couple of bullish signals coming out since April, May, right? In fact, the first one came out right over here in April, to be exact, 23rd April. The second bullish signal came out, the third bullish signal. So we've been talking about this stock, right? Nothing, very gradual, all right? Very gradual, very steady, forming higher lows, higher highs. Long-term trend intact. Look at the red and the blue line has been intact since like last year. In fact, last year has been intact already. The short-term trend, we look at what we call the 20 days moving average green line. So you can see this green line, all right, is going up since May, up, all the way up. But somewhere around November, December, right, it went flat. All right, boring, right? So if you ask me in November, December, I would say like a bit sideways, not really going up, a bit boring, right? But over the past 1-2 weeks, from sideways, it has started to point up. Does it make sense, Bob? All right. And that's where there are signs of the trend in the short term turning from sideways back to up. You see what I'm saying, Bob? Plus, we also got another one GT bullish signal. Right. So there is another confirmation. And of course, we push up a bit more already. All right. So this is Keppel, right? One of the stocks that has been on our watch list since last year, since April, May, rested for a while in November, December, but now seems like already wake up again. All right. And then starting to move higher. So let me talk about what has happened, I would say, over the past 1 to 2 weeks. So we have broken what we call this resistance level that we were kind of like trading below since November and December as we rested for a while. And this level would be, I would say, somewhere around the $10.40. All right, resistance, you can see, right? Went up and came down, right, sideways, but finally, pump. We got a bullish signal being triggered as we broke the 1040, even the 1050. Resistance gave way as well, right? So let me go and turn this red resistance line to a new green support line, because resistance would turn to a support level. And that's where we are kind of like still holding above. So I think anything above 1040, maybe not even 1040, I think maybe 1050 right now, right? I think it's gone a bit higher already, right? Well, it still looks pretty bullish, maybe even 1060, right? Over the past 2 weeks, or 1060 has came out as a pretty decent support, right? So from 1040 to 1050, now 1060 would be kind of like a support level as well. In fact, yesterday, right, if you look at the sell down yesterday, we have the market selling down due to Trump threats on tariffs, potential takeover. But last night the US market went up because of he kind of withdraw his statement and say that he don't want to use force, and there's kind of like a potential
Taco, they say, Joey.
Sorry.
Taco, Trump always chickens out, right?
Exactly. And so it rebounded that, right? So I was thinking like, maybe it might go to a support a little bit, right? A bit more attractive, but it rebounded already, right? But the key here is that 1060, right? 1060 would be a support for now. You can see that is where the green 20 days moving average line is as well. We have, in fact, pushed away from this level already, right? As what we've seen today, now it's $10.85. So I think the range is quite clearly from 1060 to $11. All right, it's like a 40 cents range, 40 cents, like up, down. I think that's the range right now, like 1060 to $11. So I think as long as you stay above 1060 and there's no bearish red signal, the green line is still pointing up, there could still be more legs to that rally, right? Like we have seen since April last year, right? And in fact, if we do break the $11, so I think that's where targets could be revised even higher to $11.50, maybe to $12. We'll see about that. But right now, I think it's been holding pretty well above the support. One of the stocks we have covered, shared with our clients many times by WhatsApp. All right, so it still looks pretty good. All right, it looks pretty good above the support level. So maybe what we can do right now, based on this new stock, I could pass on the mic to Jamie, right, to share how one could actually use warrants, all right, to potentially make more profits, on this this long position, right? So Jamie, back to you.
So Joey, you were saying about how you've been talking about Keppel for a while, but of course, targets haven't been met yet. What's interesting, I wanted to just also show the audience was Keppel is also coincidentally a stock we talked about in our recent newsletter this year. So I'll give you an example again, warrants.com.sg, we've got a market news section. And you go to morning market buzz. If you select the underlying of Keppel, one of those articles, most recent articles was on Keppel concerned a research report that we were quoting by Macquarie, and they were saying how they had upgraded Keppel's target price. And I think you can read the article if you want, but it is quite consistent with what Joey is also talking about. So I guess what we have here is a situation where those looking at the fundamental valuation and lens of Keppel is now aligning with those looking at the technicals, so experts like Joey who look on the technical side is also saying, hey, this time is looking very right. So, if you were thinking this is a great idea, the fundamentalists, the research analysts are saying this, and it's gelling with what, Joey is saying, and this gives you confidence, right, to get into into Keppel. You're thinking how you can perhaps leverage the returns there because you didn't get in when it was below $11 or below 10.50, and now you're wanting to get in, and hopefully you can then magnify the returns and catch up with those who have bought at a lower price. Well, one of the options you can look at literally is a warrant, okay, a Keppel Corp. Not Keppel, it's no longer Keppel Corp. Keppel call warrant in this case because you're bullish, right? So you want to use a call. Now, how can you select a warrant that's appropriate for you? Go to the warrant tools, go to the warrant selector tool, and go to the underlying of Keppel. You're bullish, so you choose call. Okay, now this will take you to the featured warrants' gross returns. Now, the warrants that we display here are strictly only warrants that are quoted on tight spreads, meaning less than 3 ticks wide. Okay, so we have narrowed down the selection for you already for any underlying for that matter. In this case, there are 2 Keppel call warrants that are on tight spreads. One has a fire logo, LEDW, fire logo standing for the trending warrant with the tightest spreads and highest liquidity. But there's also MXDW, another call warrant that expires sooner, and it will cost a little bit more based on the current price of 10.86, right? So how do we decide between the two? Now, with any warrant, just as you get into a stock, you need to know what your target exit is, what your target entry, which is perhaps now, you want to jump on the bandwagon. What is your target exit level? Now, Joey mentioned anything, to $11 if it crosses, which is, quite close to the current last price. But we could potentially perhaps aim for $12, which is a possible a target price that was also highlighted by Macquarie Research in our article, right? So that's about 10.5% higher from where we are now. So that will be your exit level, right? You don't even need to bother about what the warrant looks like on the chart because you should be doing your analysis on the stock, right? And you use the warrant as a means to an end. You use it to trade the stock view. So in this case, you will exit at $12. We can talk about the cut loss levels later. So we want to know what kind of price or returns we're looking at via the warrant before we decide whether to use a warrant or not. In that case, you increase the number of weeks here, okay? And immediately you see that the tool is now showing you the simulated returns on 2 warrants here. Now, if Keppel took 2 weeks to go up 10.5%, what is going to happen with these warrants is that it's going to go up anything between 75% to 77%. Okay, with the prices higher than the current entry price of 5.2 cents and 8.7 cents. Okay, and as we increase the number of weeks, what are you noticing? Are you noticing a drop in the returns? Can you see it's no longer 77%, but now it's 63.5%. So what's happening here, I've talked about it earlier. Basically, all leverage instruments come with a holding cost. In this case, for warrants, is known as time decay, where the warrant value decays with time, okay? And even if your view was right, even if the stock was unchanged, the warrant value will reduce. So our hope is that the stock will take as short a time. Actually, even if you don't buy warrants, right, with stocks, you hope that it will go up sooner rather than later, right? And you get out your returns quicker. But in the case of using a leverage product, the same principle is true, but all the more so because of the holding cost, right? Which will erode your return. So you want it to happen sooner rather than later. But sometimes stocks don't just pump, they go up, that 11% in a day or in a week, right? So what we want to use with this tool is to simulate the maximum holding period, because with leverage instruments, you're not meant to hold it until 10 years from now or a year from now and wait for Keppel to go up 11% only a year from now, right? If that's your principle and that's your style of trading, you obviously then use and go directly into the stock and you buy the stock instead. But the reason we do one good trade is because we think the momentum is building up and it's going to hopefully explode in the right direction in a short period of time. So what we want to know then is what is the maximum time frame we can have in order to use the warrant. We want to know what is the maximum time we can hold onto this view. So we keep increasing and the returns will keep decreasing. Okay, we keep increasing the number of weeks. It would reduce. Can you see it's slowing down the returns? But in this case, we want to increase it to the point where you see this second warrant now has expired. So if you want to hold on for longer than 9 weeks, you basically can only consider the first warrant, right? And you keep increasing. You see the returns are slowing down to a point where by the 15th week, 15 weeks from now, so that's 4 months and a week more, you will see that the returns are no longer more. They're no longer magnified relative to Keppel's share price return of 10.5%. Therefore, the maximum holding period for this warrant, LEDW, is around 14 weeks, because you still get a 17.3% return, still more than Keppel shares, right? But you can hold on to this view via this warrant for no more than 14 weeks. What does it look like in terms of dates, right? In terms of days, because for us, it's like 14 weeks is exactly what date, right? What date to put in the calendar, as an alarm. In this case, we have another tool called the calculator tool that tells you the date to look for. But in essence, what this has done for you already, the warrant selector tool, is to reduce your warrant selection to that one warrant. Of course, if you think Keppel is going to move, sooner in less than 14 weeks, you can go ahead and use this second warrant because it's going to make you higher returns. Can you see if Keppel moves by 11% in 2 months? 2 months time, this one will make you 66% returns versus 50%, right? So it's got more risk, more gearing. But if you are a bit more conservative, you're trying it for the first time, maybe you go for something, more conservative, longer holding period. That would be LED. To work out the date, we click into the warrant here. It will take you into what we call the live matrix. What does the live matrix do? It shows you live how the warrant is trading alongside the Keppel shares live in this instance, right? So you can see how it moves alongside Keppel shares. But what we're after is we're not just intraday traders. We want to know exactly the maximum date to hold on to this warrant for. In that case, we go to the warrant calculator tool. Again, the same tool I have used earlier during the show to show you how the Sheng Siong warrants and CityDev warrants performed, right? We talked about a target of $12. And it says about 14 weeks. Now, we don't know 14 weeks from now is roughly how long, but we know it's around basically around 3 months, right? So in that case, we will go around April, okay? And if we went for the date of, let's say, 17 April, the selector tool told us that was the maximum holding period because the gains will not be a lot more than the gains in the shares. So by the date of 17 April, can you see it's still going to make us about 27% return? So there is still gearing relative to the share price gains. So we want to kind of work out the maximum date, and I think if you move it to 20th of April, it's about 25%. We want to max this out. So approximately, we cannot be holding this on for probably beyond this week, right? So this is a bit of a trial error with this too. There you go. You see, by the end of April, this warrant will only make you 15%, not much gearing relative to the 10.5% return of Keppel shares. So in other words, if you buy into the Keppel call LEDW today, you want to put an alarm on the end of April to exit from the position. whether or not Keppel goes to $12 by then. Now, if Keppel shares hit $12 before 30th of April, please go ahead and cash in on your returns. You're going to make more returns than 15%, right? So if Keppel went there, maybe a month earlier, right, on the 31st of March, please cash in on your 40% return. If Keppel did it, even earlier, let's say, around the Chinese New Year period, please go ahead and exit with the higher returns. But what we're saying now is the maximum view. If Keppel really doesn't go there, to $12, then what's the maximum holding period? Now, the answer is around 30th of April. You have to cut your losses, okay? Let's say if Keppel at that point was only 11.50, let's say, what will it look like? You will make a 21% loss. Unfortunately, you have to cut your losses then. Why? Because even if Keppel went to $12 on the 30th of April, you're going to make very little magnified returns. And if you held on for longer, you're going to make less returns and you might even make losses. So that's why your cutoff is around the end of April. Okay. So if Keppel went to $12 ahead of 30th of April, please cut your losses. But I think the golden question also is, what if Keppel fell below, the cut loss level or went to the cut loss level? Joey, you were saying earlier, it looks well supported at around 10.50.
Yep. I think maybe about 10.60, 10.50. That would be a support for now.
So if we set a cut loss level of, say, maybe 10.45, just below the support level, we think it's a break, right? Then of course, what you are going to see is that the shares are going to be down about close to 4% below where they currently are. And if you held onto this warrant until 30th of April and it went there, you will be making a magnified losses of quite a bit, of 73%, right? Which is about 20 times more than the share. So this is where warrants can also work, against you with the magnified losses, just as it will make you magnified returns. So this is something you have to pay attention to. And a lot of investors, I get this question, it's already down 73%. Should I really cut loss? Should I just hold on to it, Jamie? Because there's a hope that Keppel can rebound from 10.45, right? Maybe back to $12. Well, you can, but because we set the maximum holding period based on the $12 view was 30th of April, so if you even if it went back to $12 and you held beyond 30th of April, you see what is going to happen is, let's say it took another month, right? It did rebound, and then went to $12. You see, you're still going to make losses, okay? Less losses, right? Because it is rebounded from the cut loss level of 10.45, but you're still going to make losses with that view. So that's why we say it's painful, but you got to cut losses. But it's okay, Sometimes we take our losses. We have the magnified loss of 73%, but hey, at least it's not 100%. So you still have some capital less to hopefully enter via another stock, or you wait for it to rebound back to a suitable entry level again, and you go again. Better than having all your losses wiped out, right? So with warrants, you have to be very disciplined, and that's why we hope you tune into the One Good Trade show to know how you should be using these warrants. And now with the Keppel warrant, you do not hold on to it beyond 30th of April. Hopefully it goes, before to the target price before then, and that's something we can shout about in the next One Good Trade live show. But this is what you have to do with this Keppel warrant for now. Joey, back to you.
Thank you so much, Jamie. I think Jamie mentioned a very, very good point, right, in terms of like warrants, right? So we talk about the underlying stock, right? And Jamie went on to talk about warrants. So I think what Jamie mentioned in terms of the holding period, right? Very important for warrants, guys. When you buy a warrant, please don't buy and then you keep and you hold all the way to expiry. You don't even know when you get out, right? No, right? That's not the way to do it, right? You make sure you understand. I think Jamie had mentioned how, and by the way, the link is in the chat, guys, www.warrants.com.sg. What Jamie have showed you guys regarding the warrants calculator, how you can reduce the holding period to see what would be the kind of like the maximum holding period that you can hold on to that makes sense. All right. If not, you can just buy the underlying, if you have bought the warrants, right? So link is right in the chat. Okay. So I think very important, you need to understand the holding period. One thing about warrants is such that you would want the stock to move up as quickly as possible, right? The faster it moves up, the shorter the time frame, that's where your returns are magnified. I think JB mentioned that, based on the 10%, right, underlying returns, if you move up, right, fast, it could be up to 60, 70% on the warrant, right? If you move up, I think if I'm not wrong, JB, like within like 2-3 weeks, right, it could be 70%, correct, on the warrant. So that would be kind of like a magnified return if it does move up fast. Right? But if it doesn't, you need to have a plan to get out, all right, to not just hold it all the way to expiry. All right. Okay. Yep. So Jimmy, anything to add regarding that? I mean, the common mistakes that most people make. I mean, and guys, if you have any questions, type in the chat. I mean, I have a very special guest, Jamie, right here joining me. All right, just to add more value to you guys. So anything regarding warrants, not sure about, type in the chat. All right. We seldom have this, so very special guest. Make sure you pick the brains of Jamie right here. Okay. Any questions on warrant? Yeah, Jimmy.
Joey, you mentioned common mistakes. So I think I've already covered that, which is warrant investors don't cut their losses, even though they've used a tool and realize that the maximum period is actually 14 weeks from now. But then you hold on to it because, I mean, let's face it, right? Cutting losses is a investor psychology that we all need to master, including myself, right? It's very painful to cut losses. We usually with shares, we tend to say, it's okay, it's not, it's down 50%. It's okay, surely I can make back some, or I can make, I can incur less losses. But when we incur less losses, we now want to make gains, right? So it's very difficult for us to cut losses. But when you use a leverage instrument, a trading instrument to amplify returns, right, based on that view or trading view of a stock, we must learn and overcome that investor psychology of unwillingness to cut losses. In fact, one of the questions we have here is by Jenna Valjo, asking, is it still okay to buy it? It's already run quite a bit. And I think that's when, instruments like warrants can work to your advantage because you've already missed out, on maybe 1/3 of the run. And you're thinking, oh yeah, but we really missed out, right? 1/3, what, very sayang, right? So therefore, you kind of use an instrument like warrants. That's when you use an instrument like warrant to catch up on the returns you have missed out. Because why? Warrants can amplify returns. Of course, they amplify losses as well. But if you're right, there is another 2/3 more to run, or even 1/3 more of the chart trend to run. You can then use these warrants to easily catch up on the returns that you missed out on, right, in the short term. So, Jenna Valjo, I mean, the reason we're talking about Keppel is really because Joey believes that it continues to be that one good trade that is still showing very bullish signals, and that's why we've covered it. The other common mistake that investors make is when they trade warrants, they just buy blindly. They don't use tools to ascertain how long to hold on to it for. So again, hopefully by partnering up with Joey, when he talks about the trade idea, we say, let's use warrants. And I tell you what the maximum holding period is based on those tools. I introduce you tools. It will empower you to make better trading decisions. And when we're empowered to make better trading decisions, I think the likelihood of making a successful trade is higher rather than if you don't use, you leave it to luck. Or even a gamble, if I should say. So don't always be aware of the tools available in order to make better investment or trading decisions when you use a more complex tool such as warrants to leverage on your return. JM3 Tarsina, she's asked the question, are warrants same as options? What is the difference if not the same? I think, Joey, this is a consistent question we get on every show. And I'm glad because it just means that there are some people here who are already aware of what an option is. You're probably already trading options right now. And look, options have become very popular. It's one of those instruments that especially the younger generation is using a lot of over US shares especially, but maybe less so for Singapore shares, less so for Hong Kong shares, less so for indices because they're not as easily available to retail investors, in Singapore, which is where structured warrants come in. Warrants are a form of options, right? In fact, the pricing model that we use to price a warrant is the same as options. It is called the Black-Scholes pricing model. If you trade options, you are very familiar with this probably. The Black-Scholes pricing model where, things like implied volatility, things like expiry date, things like strike, is exactly the same as what you would hear when you trade an option. Now, but what exactly is the difference? I'm just on my education page where we've got educational 1-minute videos. And we have specifically a video on, how warrants are different from options. Let's see if you can see it here. We have frequently asked question, what the difference between structured warrants and company warrants? But we do have one on the difference between structured warrants and options presented in a fun way whilst playing foosball. But if you want to know more, please click on it and view it. But otherwise, I'm here on the show to tell you what the difference is. Essentially, warrants are a form of options, but the key differences, would say there are quite a couple, but I will flag out the key differences. One is, like I said, options over Singapore shares. That's not something that you can
can't do that.
fully trade on a broker platform as you can with versus US shares. And that's because the option market is not as developed, in Singapore. So if you wanted to trade option over Keppel, probably quite hard for you to find, and almost impossible. But if you use a structured warrant, then it's possible, right? Because there are issuers like Macquarie Warrants who market make and issue such a product and list it on the SGX. Now, options are typically listed on the over-the-counter exchange OTC market. In Hong Kong, they are traded on the exchange traded options market, which is primarily for institutional investors to trade. So, with warrants, we list on SGX on a retail a platform where you can trade it via your brokerages such as Philip with Joey Choy or other brokers, right? So I would say it's a more accessible product, in this case, a warrant over Keppel versus a Keppel option. The other key difference is with warrants, we have a designated market maker, as I've mentioned, such as Macquarie, where we are there to provide the bid and offer prices and which track the underlying shares, which you can see on the live matrix. So you don't necessarily have that with options, right? Certainly not over every option, even on the exchange traded option market in Hong Kong. So we've got a designated market maker as well. That's the big difference. But the most important difference, I always say, is with options. People like to do different strategies, whether it's your butterfly, strangle, straddle, et cetera, which can be very complex. Because the key difference is with options, you can short it. You can short it to earn a premium, right? Some people think, oh, that's how they can generate income. But when you short, you also, especially a naked short, you're also exposed indefinitely to losses, meaning your losses can keep running, right? As long as it's a naked short. But with warrants, they are just like securities listed on SGX. They are long-only products, meaning just like shares, you can only buy. You can't short. Well, you can, then you'll be subjected to the T+2 buy-in market on SGX. So essentially, you can't short a warrant to earn income. Only the issuer can buy and sell because we issue the product, we have inventory, but you don't have inventory, so you can't, which means your strategies of all the, related to options, your butterfly, strangle, straddle, collar, etc., they're not going to work with warrants. Warrants are a lot more vanilla. They're a lot simpler, I should say, whereby you use it to trade your long view, bullish view on the shares, or if through a put warrant, you use it to hedge or trade a bearish view. So you buy either a call or buy a put. You don't short anything, okay? So I would say that's the key difference. In my opinion, then it makes the warrant product just a bit simpler, because with options, you also have to deal with maximum holding period, you have to deal with time decay, you have to deal with implied volatility, etc. So I would say just by virtue of the fact that you can only buy a warrant, that in itself makes it a simpler strategy already.
Yep. Well said. I think you can add on there. I think like for warrants, right, guys? Yeah, I think Jamie mentioned you can't short warrants, right? It's different from options. So it's very simple. Yeah, you want it to go up, you think that you go up, you buy a call, right? You think that you go down, you buy a put. Full stop. That's it, right? So much more simpler. Yep. I think
we have another question by Talker Smooth. What is the Sheng Siong warrants you mentioned? What is the code? Can buy now? I cannot answer whether you can buy now. That's a Joey question, but Joey already earlier, did talk about the trend being intact. I think we're looking at a crossing of 275, right, Joey? And then headed towards $3 as a target price. Sheng Siong right now, I think today is about 275, Joey. So it seems like there could be more upside. But of course, less upside than if you had entered earlier, right? Back in November where we talked about it, it was lower. But of course, we've also said the warrant is now in the red. So if you're looking to get in now, what is the Sheng Siong warrant that was mentioned? If I could show you my warrant search tool, That's under warrant tools. The third option here, warrant search. It shows you all the Sheng Siong warrants available, right? If I choose Sheng Siong and I want to choose a call, I click on submit. You'll be able to see all the Sheng Siong warrants we have. In this case, there are 2 of them. One is going to expire quite soon in 2 months' time, another expiring in June. That is the one we have a fire logo to signal that that's a trending warrant, tighter spreads, highest liquidity. That is the warrant we were talking about as well, Talker Smooth. Q73W is the code. It's currently bidding at 1.1 cents, offered at 1.2 cents. It was yesterday that we did start to see some buying, some investors already coming in to accumulate. Whether or not they're trading on Joey's view, I don't know. But indeed, the stock is now at attractive level. Technically 275. If it breaks, we're really looking towards a move towards $3. Just to repeat, what kind of potential returns we're looking at if we entered today, Talker Smooth, if you use the calculator tool, we're aiming for $3. Of course, if it happened during the day, that's great. That's about close to 10% higher from where we are today. You're going to make 73% return. But the likelihood of a stock like Sheng Siong generally a bit less volatile, moving 10% a day. Not impossible, Joey, but remote chances, right? So we want to work out how long you can hold on to this view for. We talked about end of March, back in November. And I think that currently, if you entered now, a bit later than November, you probably can hold on to this view for longer. In that case, you can see at the 30th of March, it's still going to make about 3.6 times more. So we want to work out what the maximum holding period is. We just have to play around with this. We maybe move it to 15th of April. Let's see. There you go, 15th of April. Can you see the returns already dropping to about 18%? So that is not a lot more gearing already. So maybe 29th of April. There you go. Basically, if you want to enter via this warrant here for Sheng Siong, which is Q73W, you cannot hold on to this warrant for longer than 3 months. So similar to Keppel, you should be exiting closer to the end of April. Because why? Even if Sheng Siong moved up about 10%, you're actually making less returns, really about 9%. Okay, so do not hold on to this warrant for longer than the end of April. 97 days from today, right? So that's about a three-month period. So Talker Smooth, I hope that has answered your question. Good luck with this. We look forward to also recapping of this idea in the next show. Okay, ABCXYZ give us, how can we check warrants of other SGX listed shares? I think that is a question that hopefully we have already answered. The answer is with the warrant search tool on my website. We have warrants over different names. You've just seen Alibaba, China Life, BYD, CityDev, DBS. Now it's up to you to scroll through the list. You can narrow it down to Singapore shares, Hong Kong shares, or indices. So there are quite a lot. We mainly list it over shares that are quite popular, which people talk about. So we don't have a warrant over every share. So for example, if you are looking at Food Empire Holdings, for example, I say all that because I follow Joey's shows and I know Food Empire is something he talks about, and a lot of maybe small cap, mid cap names, we don't necessarily have it. We could if there was more demand, but generally we have it over the key popular names in Singapore. So that includes, for example, CityDev, DBS, the banks, Keppel, Neo Singapore, SET, Citrum, Sembcorp Industries, Sheng Siong, SIA, SGX, Singtel, etc., etc. SC Engineering is a stock we talked about today because Joey commented on it as well. So have a look at our warrant search tool and have a look at which warrant will suit you based on the tools I've shared about, namely the selector tool, the calculator, and a live matrix tool to see how it moves live alongside their respective shares. Okay?
All right, very good. Yeah, so guys, the link is in the chat, www.warrants.com.sg. All right, that's what Jamie is using right now, the website. That's where you can go to warrant search and look at all the warrants that are available. I think Jamie mentioned a very powerful point as well regarding the the warrants that has the fire icon. That's one that's title spread. You can probably choose that option. All right, maybe I could add on this a little bit. I think on Genovalo, all right, regarding your question. So it could be a warrants kind of question. It could be like, is it time to buy? Maybe let me go to share my screen as well. All right, so this is Keppel, right? Is it still okay to buy Keppel considering it has run up quite a bit already? Well, this is a question that I get asked quite often as well. All right, not really on warrants, but in terms of like the whole mindset, the psychology, a bit of the strategy as well. So today, as I say, I don't have time to cover the whole framework. But if you want to find out a bit more on that, right, Janabalo, right, what happens, you could attend a free webinar. And the rest of you who have not yet attended my webinar, you want to learn a bit more about the strategy, about the tools that we're using, whereby, we covered all the stocks like, Sheng Siong and stuff. And what we do, as I say, we have this tool whereby you can turn it on, pump, disappear, right, pump, on. That's it, 5 seconds. You get a quick opinion. In seconds, you get alerted when to get in, maybe when to get out as well. All right. So check out the links right in the chat. Attend a free webinar. We have one next Tuesday at 7:30 p.m. All right. And that's where I look forward to share more with you. Right. But back to your question, Janabala Joe, right? Regarding like it's run up by quite a bit. Well, you can see that when we had the first bullish signal in April, well, it has gone up all the way until here in September, July, August, around here. And it was like about a 45% increase. And to be honest, when we, kind of like send out a few notes to our clients in Philip Securities by WhatsApp, we've got another bullish signal. People are saying that, wow, 45, 47%, wow, a lot really, like, quite a lot. You sure can buy or not? I mean, like, really went up so much. Don't be greedy, that kind of thing, right? But it's not about being greedy or not. I mean, basically, it's like, if there are more confirmations, more signs that, that you can move even higher, then why not we maximize our profits and ride the trend even more? You see what I'm saying? Rather than just getting out and then you go up some more, right? So that's a bit on the mindset, a bit on the psychology. That's what pretty much I share in the webinar, all right, in terms of the whole trading psychology to have as well. All right. Of course, we have this tool that just keep things a bit more systematic. That there's no overwhelm, no second guessing, no overthinking. All right, and that's how it keeps us, I would say, to really follow what we call a very simple and repeatable process. All right, so attend a free webinar to learn a bit more on that lah. All right, okay, let's see. All right, let's see. I think we have pretty much covered all the questions already, right? And anything to add, Jamie?
Well, I just want to say, if you need a bit more hand-holding with regards to trading warrants, or you want to find out more, again, you could go back to our website, warrants.com.sg. There is a hotline there, 660100289. If you call through, you are going to speak to me. Even if it was not me, there will be others, on my desk. We are all based here in Singapore and happy to help you out and resolve your queries. Otherwise, we do have an advanced warrant seminar. If you wanted to find out even more about warrants, what I talked about on implied volatility, strike, and et cetera, you want to understand it even better, you can come down on the 5th of March. It's going to be at our office. Come to our website and you can sign up here. You can see the seminar available flashing. So Joey has got his webinar. We've got our seminar as well. But otherwise, always just use this website if you're considering, a warrant trade, because use the tools to find out and answer the questions of expected returns, expected losses, and also maximum holding period. I think you really just need these three before you can get comfortable trading, because you need to know what you're in it for, right? Or rather, what's in it for you as well. Both pros and cons, and especially this concerning your investment. How much to invest, etc. We all have tools there to help you out. If you need to know how to use it, just give me a call. Okay. And with that, I'll wish you all the best, to the best start that one can have in the market in 2026. Like I said, I think, it's off to a very hot start for us, in Singapore here. A lot of shares continue their trends from
very
December.
strong.
And it's looking good, and hopefully that sustains. But ultimately, whether it goes up or down, there is always the warrant tool to help you out and to leverage returns. So hopefully, it helps you boost your returns to a very prosperous 2026. We might not see each other before the Chinese New Year, so just want to say 恭喜发财，万事如意, and all the best to all of you ahead of the Chinese New Year. And I'll see you after for advanced seminar if you're keen to know more about warrants. But otherwise, my website's got everything. I've talked about the 1-minute videos that tells you the concept of warrants, the important ones, in a very fun way. So do tune into that as well. If you want to see more of me playing foosball and telling you about warrants, over billet, etc., please explore our website and give me a call if you have further questions.
All right. Thank you so much, Jamie, right, for joining us today. All right. And also sharing her take, how you can use warrants. And yeah, I mean, yeah, Happy New Year to all of you. 恭喜发财，万事如意. All right, in case we don't see you guys in, I think it'll probably be after Chinese New Year, right? Yeah, so thank you so much, all right? And there's one thing I want to add, right? I mean, Jamie has talked about warrants as well, right? But I want to share that, for these stocks that we talk about, like Sheng Siong, even Keppel, I think CityDev as well. These are some of the ideas that we share with our clients in Philip Securities for free. Right, the link's right in the chat, right? In case you are not yet a client of mine in Philip Securities, so I do check it out. Some of the service you provide, you get some of the ideas by WhatsApp daily. For free, all right, at no additional cost. Link in the chat, check it out. So at least you can get some of those ideas much faster, like the time we take to do, a live show with Jamie. All right, hopefully by then you have made a little bit of money more already. Okay, so that's it. All right, thank you so much for joining us in today's One Good Trade live show. We'll see you guys the next time, right? Maybe 1 or 2 months time. And yeah, thank you so much. Bye, everyone. Bye-bye.
All the best. Bye-bye.
Bye-bye.